Today, we are going to be going over creating your trading system. That way, we can get super clear on what needs to be done in our trading. Let me bring this up. Excellent. So, we're going to be going over creating your trading system. This is going to be super important because there's many aspects of a trading system that you're going to need, in my opinion, to increase your edge and your success in your trading. Now, because of the time constraints, I'm not going to go into too many details of all the different aspects, but we'll be going over as much as we can, and I'll leave some time at the end so we can go over some questions as well. So, your trading system, why is it important? A trading system is really going to be important because it's going to provide you structure and consistency and discipline to your approach as a trader. Without a well-defined system, decisions can become emotional, impulsive, and inconsistent, which can lead to losses or missed opportunities. Some essential components, which we'll go over in this guide, is going to include your risk management rules, trading rules, your playbook or your setups that you look to take, journaling and journaling practices, and disciplines and other practices, which is going to help you perform best during your trading session. Really having a solid trading system isn't just about making money, as we spoke about earlier. It's really about preserving your capital and risking accordingly, learning from your past trades, and really evolving and adapting as a trader, since things are always going to change and going to be many different market conditions, so on and so forth. Now, for you guys, a question for you to ask yourself is, do you have a system in place, or are you still trying to figure one out? This is an example of my trading system. So I have everything a little condensed here just so you guys can see it. So I have my non-negotiable section, which is, my morning routine, making sure I complete my morning affirmations, going for a walk, stretching, a quick little workout or doing some yoga, eating properly. As Guy mentioned earlier, when you get that dopamine rush by, eating all these sweets and things like that, it can really burn you out. Thankfully, I do not do cold showers. He'll have to teach me that one. But I do take salt water, as he mentioned, since it can really help us focus with the electrolytes and such that our brain needs to fire off, right? Of course, our trading rules, which is going to be key, so we know what we need to avoid doing and what we can capitalize on doing, alongside having a guideline for risk management, how much you're going to be risking for specific trades, for specific setups, so on and so forth. And then, of course, your playbook. What are the specific setups that you have clearly defined in your playbook that you are going to be looking for? And then, of course, paying yourself, because for the most part, I'd imagine a lot of us are here to make money. And sure, it can be great to grow your account, but if you're never taking money out, then it's like, what are you really doing, right? Because I've seen many people grow their accounts to crazy amounts, but they never take anything out, and then they blow it all with bad habits. So it's very, very important. Make sure to pay yourself always. Let's go through the non-negotiables. So when it comes to trading, having non-negotiables or specific tasks that must be completed before each trading session will be crucial for ensuring that you're operating at your best. While these tasks are going to vary from trader to trader and individual to individual, some universal practices are going to apply to all of us. For example, this can be getting proper rest, eliminating distractions, and being fully prepared and focused for the session ahead, which I'll speak on in the few following slides. Based on your journey, a question for you guys: what are some non-negotiables that you guys have found for your success? Some for me that I'll mention is sleep is very, very important to me. You will not catch me trading London session. I'm on the East Coast in America, so I need my sleep. If I don't sleep properly, then I cannot trade. I believe Guy mentioned it earlier, if I recall correctly, where if we don't sleep properly, we can be a lot more emotional or prone to our emotions. I know for myself that is a case for me. So really understanding yourself is going to be key. So if I don't sleep properly, I'll just let the day go, right? We should never be so desperate enough that we're forcing trading days. I'd rather end at 0 and then come back tomorrow properly rested than forcing a trading day and ending red just because I needed to trade, right? Which you don't. There's many other days to trade. Today or tomorrow's not going to make or break your trading career. Cool. Let's keep it going. So some things, as I mentioned, like some non-negotiables for me, definitely meditation, exercising, and being prepared is going to be one of the key components. So meditation is really going to allow us to slow down and really quiet our mind down, bringing us to a relaxed and focused state, which is going to be essential for trading. For me, if I'm not in a focused state, then I'm not going to bother trading, because if I'm like scatterbrained or there's a lot that's going on and I'm not really focused, it's really going to be a detriment or bad for my trading. And I've made too many mistakes not doing this. So now it has to be done or I cannot trade. Exercise. Definitely, it's important to be healthy, right? Exercising regularly is going to help you improve with your brain health, your memory, relaxation, and really your sleep quality. As traders, we really are going to require a proper night's rest in order to be fully prepared for a trading session, which is going to be vital to our performance. And then, of course, lastly, preparation, right? We want to make sure that we're prepared for the trading session. Being well prepared is really going to be crucial for you. You really want to avoid kind of scrambling at the screen or like running to the screen just because you just woke up. And you want to have a clear understanding of what's going on, right? One thing which I'll speak a little more about later, what I used to do that was very, very bad for me when I first started, when, like my life wasn't really in order or structured. I would be going to sleep late. I would wake up late, and, the market opens at 9:30. And I would wake up 5 minutes before 9:30, or even at 9:30, immediately wake up, get my phone, and, oh, cool, let me buy calls or let me buy puts. I have no idea what's going on. I'm super tired, still crust in my eye. It wasn't good, right? So we need to be prepared. We need to understand what we're going to be trading, what setups we're going to be looking for, understanding what news is going to be coming out, and, whatever else that might look like for your trading process. The next thing that I want to go over is going to be trading rules. So far, before I get into the trading rules, is the non-negotiables making sense? Is this resonating with anybody? Excellent. So with trading rules, it's going to be essential due to providing structure and consistency, helping traders make decisions based on logic rather than your emotions, right? It's going to help you protect your capital by enforcing risk management strategies such as setting stop losses and, defining your position sizes. Rules are also going to promote discipline, ensuring traders stick to their plan and really avoid reacting impulsively to market fluctuations. Overall, it's really going to lead you to be a more efficient decision maker and allow for better evaluation and refinement of your trading strategy over time, which I'll go over in a few slides. So trading rules, super, super important. I always ask some individuals, which I've seen like online, they'll be like, oh, and even myself in the past was like, oh, trading is a scam. This doesn't work. People are just trying to take your money and this and that. And then I always ask them, I'm like, hey, what are your trading rules? What are your risk management guidelines? What are your setups that you take? And they're like, oh, I don't have any. So it's like, well, how do you expect to be good at trading if you don't have a proper foundation, right? If we go to school to be a surgeon, they're not going to let you operate on somebody in a week of going to, med school, right? You got to do your 4 years. They're going to have you practice on like fake bodies and things like that. And then you're going to do the real thing. So for trading, if you don't have that proper foundation and education, you're really going to struggle. So some little key points, with trading rules, the consistency portion, they're going to provide you a structured approach, as I mentioned earlier, helping avoid the impulsive decisions and really ensuring your long-term success. because again, we can't control what the market wants to do. We can only control what we do and what actions we take. So just showing up every day, or when you can, and just following your plan and your rules, it's going to go a long way for you. Risk management, having defined set limits on your trade size and stop loss orders, and it's going to really help you for protecting against significant losses, right? You don't want to over leverage. You don't want to double or triple your size overnight just because you think you're going to win that trade. You always want to have a well-defined risk structure. You can think this trade is going to win 100% or hope that it is, which we never do. Like Anmol said earlier, hoping is not a strategy. So we need to be super clear on how much we're comfortable with risking on a trade, and adjusting our size according to the setup. Because, for example, some of my setups are price action based. So that specific candle might be, let's say, for those who know futures, it might be 50 points. Or if the market's more volatile, the next day it might be 100 points. So I might need to size down because the range is bigger, right? And of course, discipline, which rules is going to help with, which is going to enforce a rational approach and preventing emotional reactions and maintaining focus, right? So being disciplined and understanding that, hey, regardless if I think this trade is going to be 100%, I still need to follow my risk management rules, and I still need to follow my setups or whatever, your trading system has in it. Next, performance evaluation. Having rules is going to allow for objective performance tracking, identifying and help you identify areas for improvement. So, collecting data or, journaling, right? So for your performance, let's say, I believe Guy was mentioning this. I forgot the exact term that he used or context, but I believe it was something that, man, what's his name? I have his book in my other room. Mark Douglas. There we go. So Guy was mentioning like he'll get to like day 3 or day 4 instead of like going to day 21 or 25. And it's like, if I follow my rules for, let's say, 30 days, we can see proper results where it's like, all right, if I follow my rules, these are the results that I may get. Again, the dollar amount, you can't control that. That's up to the market. But generally, you can see what your results are compared to when you don't follow your rules and when you do follow your rules. So it's really going to bring clarity to your trading and where you can improve, where you need to, what you need to work on, whether it be patience, sizing, so on and so forth. And as I mentioned before, efficiency. Clear rules is really going to streamline your decision making, and it's going to save time and increase your trading efficiency. So understanding, hey, should I be on the charts 30 minutes before the market open? Should I be on the charts 10 or 20 minutes before that? Should I have my watch list ready in the morning, the day prior, whatever it may be, so it can really make your trading session more efficient. And as always, your trading rules are really going to be unique to yourself. Everybody's going to have their own. Of course, there are universal ones, but you really want to make sure that you journal and you write down everything that happens before, during, and after your trading session to get clear on what you need to work on. For example, one thing that I have my students add in their journal prompts is, how did you feel before you took the trade, during the trade, and after the trade? Because those 3 things I see a lot of people not add in their trading journal. And it's like, all right, yes, you lost the trade or you won the trade, but why did that happen, right? Was it because, the market just didn't want to go in your favor, which happens? Or was it because before you got into the trade, you were feeling FOMO and you decided to jump into the trade prematurely? So you got in too early and then it pulled back and stopped you out before it gave you the confirmations. Or let's say after the trade, when you got out of it, if you lost, did you get upset? Did you revenge trade after that? So all these bits of information is really going to help you understand more on how you operate when certain things happen. That way we can work on them and improve them, so we can reduce the chances of those happening when we're trading. And I wouldn't really say completely eliminate it because, of course, we're human. We make mistakes. We're not perfect. But for the most part, really reducing those challenges as much as we can. Any of this resonating? Anybody here have got upset after a trade and revenge traded? I know I definitely have. Excellent. So next, we're going to be going over risk management guidelines. Now, I'm going to keep this a little condensed because we can spend hours talking about risk management. So risk management is really going to be your number one priority when it comes to trading. Managing your risk is going to be crucial in trading because it's going to help protect your capital from significant losses, ensuring that you stay in the trading game over the long term, right? We're not here, or at least for the most part, if you want to really treat this professionally and do this the proper way, you're probably not going to be a millionaire in one day, in 1 week, in 1 month, right? This is an overtime thing, as we were discussing earlier. So, over leveraging to make all the money that you want to make, or to buy the new car, or to help friends out or family or whatever, all of that is actually going to be detrimental to you if you over leverage, right? Let's say if you only have $10,000 in your account. Let's say you're just risking $500 a trade and you're like, man, this is taking forever to me to grow the account. So you're like, let me use $5,000 a trade. Let's say you lose 50% on that trade. You lost a quarter of your account, 25%. Now you're down to 7,500. And if you keep on doing that, you only really have 4 or 5 more trades before the account is done. So the goal here is really not to over leverage to make a lot of money every single day. It's really about being consistent and respecting your risk management rules, because that's what's going to keep you in the game long term, right? Like Guy mentioned and the others, you can go months or even weeks where you might be red. That's just the nature of trading, right? Market conditions may change. We need to adjust certain things that we can't control. So it's really always understanding that having proper risk management guidelines is really going to be key to make sure that you're going to stay in the game long term. Anybody here over leverage? Anybody done that before? I definitely have, and I paid the price. My biggest loss I took 2025 in 2021, so 4 years ago. I thought I was the hot shot. I knew what I was doing in the market. I was making all this money. And I was like, well, I'm using $1,000 in my account. Let me just use $5,000 now. Actually, to be exact, I used $4,400 because I remember this trade and I would never forget it. And I grew my account a lot. And I'm like, well, I'm winning so much. Let me just, use even more size. And the mistake that I did was I was ready mentally to make a lot more money, but I wasn't ready emotionally and mentally to lose a lot more money. So when that trade that I put $4,400 in, going from 1,000 to 4,400, so I pretty much 4x'd my position size overnight. And when I hit my stop loss, I didn't get out. I was like, well, I still have 7 more months on this option contract. Let me just hold it. And for those who trade options, you know that it can go south really fast if you don't respect your stop loss. So for me, I was stubborn and I didn't respect my stop loss. I turned to hope. I'm like, well, I have 7 more months. I can wait until it goes back in my favor. It did not go back in my favor. And I lost like 98% on that trade, which was, I think it was like 4,200 to 4,300. I left for like $100. And of course, for some people, that might not be a lot of money. For me, it was at the time. And, that messed me up for a long time. And, those psychological scars that may come up by big losses can be very challenging to get out of. So we always want to, as I mentioned, really emphasize and, have risk management as a priority, because you do not want to go down that path where you get the emotional scarring by big losses, because that's going to be an even bigger challenge to get out of now. So These specific categories that I have, these are just what I consider these types of traders. Of course, this can be different for you. This is just, what I would consider. So to me, it's something that you can use as like a guideline. Of course, you can adjust this to your liking and whatever you prefer. For me, an aggressive trader would be somebody who may be using 15 to 20% of their account every single trade. A moderately aggressive trader would be 7 to 10% of their account per trade. And of course, a conservative trader would be somebody who uses 2 to 5% of their account. I fall in the category of a moderately aggressive trader. So I usually use 7 to 10% of my account per trade, depending on the setup, of course. Sometimes I'll be a little more conservative, depending what I see and what the setup may bring. But essentially, just to kind of give you guys a little breakdown, let's say that you're an aggressive trader and using 15. Actually, let's just stick to the moderately aggressive to keep it a little more simple. Let's say I'm using 10% of my account and I don't want to lose more than 3% of my account in that trade, which would be $300. So let's say if I get into an option or an equity trade, my max stop loss is going to be 30% if I use $1,000, which is going to equate to 3% of my account value. Now, of course, you can, if the setup needs a bigger stop loss, you can decrease your size. So I can go to use 7% of my account, and I can take up to like a 40% loss, which will still be about 2.8% of my account, right? So I'm still within the risk tolerance that I'm comfortable with. Again, this is different for everybody. Some individuals don't want to lose more than 3%. Some people don't want to lose more than 1% of their account in a trade. This really varies to you. So you really have to, spend some time with this and kind of get an idea of what works best for you. Again, everybody's different, and based on your experience, you can use this as a guideline that may help you. Is this making sense? Everybody clear? Risk management? Excellent. Cool. Let's continue. So next, we're going to be going over a playbook and its importance. So a playbook is essentially a structured guide that will outline your approach to the markets. This is going to include key elements such as your trading strategy, criteria for entering a trade, risk management rules, and more that we'll be discussing in a few moments in this guide. Your playbook is really going to be key for your success as a trader, alongside many other things. But one of the keys components, it will help with being consistent in your setups, which are going to be clearly defined, which will help on focusing on what works, avoiding what does not work, minimize and reduce your emotional and impulsive trades, as well as protecting your capital by sticking with your risk management rules tailored to that specific setup. So essentially, this is going to be either a collection of screenshots, which I'll show you in a few moments how I kind of outline mine. You can put it in a folder, a PDF, really however you want. You can really put it down on a piece of paper, whatever works best for you. I just have a PDF and a folder on my computer with all my setups and all the pictures and images and notes regarding the setup. That way I'm super clear on what I'm going to take, what I'm going to avoid, etc. Does anybody here have a playbook? And does anybody here not have a playbook? Are you not clear on what your setups are? Or are you clear on what your setups are? Excellent. Cool. So here's just an example of one of mine. So for those who know me, we definitely love W pattern, or the W trade model. It's essentially, for those who, it's pretty much just a double bottom, and we're just looking for a higher low to present itself on the right side, and then we just take the first bullish reversal back to the upside. I won't go too deep into the specifics of the setups and specific jargon because we're limited on time. But essentially, this is how I kind of lay out my playbook. So I'll take screenshots of the specific setups and what they look like, and then I'll make some basic notes listed here, and then the specific parameters that I need in order to take this trade. For example, if these parameters do not show up, then I do not take the trade. As a quick example, as soon as I get the higher low, I'm going to take the first bullish candle that breaks the previous candle's high, right? Now, if this low breaks this low, then that's not part of my parameters. So I will not even bother touching that setup. I will let it go because it's not part of my parameters. And really, what we want to do is take the absolute best setups. To me, it doesn't make sense to take poor setups, right? Every time you take a poor setup, or you're going to take a setup that you're not really confident in and that you don't really have data in, you're willingly telling the market, hey, market, I'm going to give you my money because this is not my best setup, right? While, of course, you still are going to lose trades. I lose these trades, perfectly normal, but we can control the times that we do take the trade based on our parameters and what we may need to look for. Now, of course, this can be different for every individual. If you use indicators, what do your indicators need to present? Or if you trade price action, what does price action need to do for you to get into the trade, right? So some other data, what type of setup is it? Is it a reversal setup? Is it a breakout? Is it a day trade? Is it a scalp? Is it a swing trade, right? The take profit and stop loss. Is it a specific percentage that we always use? Is it variable to price action? What time frames does this trade print on, right? It's like for this specific setup, I usually use it, look for it on the 5 and 15-minute time frame in the morning of the New York session, on the 5 and 15-minute time frame. And if I'm swing trading, I'll probably look for it on the 4-hour, the daily, and the weekly, which don't come too often, but you can find it there. So just some pieces of information that you can use. And then, of course, just having another section of additional notes. So as I mentioned earlier, this specific setup, I look for between 10 a.m. to 12 p.m. Eastern time, and I only trade myself from 9:30 a.m. to 12 noon or earlier if I don't really see anything else that shows up, or if I made a good amount based on the first or second setup that I take. So the specific setup during that trading session from 10 to 12, I'm going to be paying attention. All right, are these specific parameters aligning? Cool. Then this setup is probably going to present itself. Let me get ready to take it. That way you're super clear on when the setup is going to appear and when you can maximize and capitalize on your time. As Agnieszka was mentioning earlier, she only trades until 11 a.m. Eastern time. We don't need to be on the charts all day. In my opinion, the more you're on the charts, the worse you may actually be, because your mental energy isn't as much as it was in the morning, or your mental capital, as people may say, right? So for me, I only spend 2.5 hours maximum a day on the chart. Anything more than that, then my brain gets fried and, I get overwhelmed. So for me, I found based on my journaling that I make most of my money in the morning time. So it only makes sense to trade during that time, since I usually gave away money in the afternoon. So what I would encourage you guys to do based on your journaling, and if you don't journal, definitely journal, is based on your journaling, when do you make most of your money? Is it in the afternoon? Is it in the morning time? Is it during the Asia session? Is it during the London session? So on and so forth. That way we can be really, really clear on when we make our most money and when we should be capitalizing on during our trading session. If you don't make that much money in the afternoon, or you're really giving money back in the afternoon from the morning, then it doesn't make sense to trade the afternoon, right? And on top of that, I'd imagine that most people here are here to trade to get their time back and really enjoy life and do what they want to do. It doesn't really make sense to, if you want to go the full-time trader route, to quit your job that you spend 8-9 hours at to have another job that you spend 8-9 hours at, right? I'm here to make my money and just get up and go do whatever I want. Like today, we were trading in my group together, and we took a trade and we finished like in an hour and a half. And then we just We could have gotten off and just went and enjoyed our day. So again, you don't want to spend that much time on the charts. And again, everybody's different. There are people who excel at staying on the charts all day. I have discovered that that is not me. And again, depending on what works best for you. If you find it you make a lot of money when you stay on for a long time, hey, keep on doing it. If you find that you don't excel in that, then you might want to cut that down a bit. Playbook section, we're making sense? Any questions? Cool. So let's talk about emotional regulation, which is going to be very important because we really need to manage ourselves and really be disciplined and control ourselves as best we can when we are trading. As Guy mentioned and Agnieszka, you know, our brains are not designed to be in risky situations. I believe Guy was saying a story like, if like 10, 20,000 years ago, you're hanging out in the forest with your wife or with your buddy or whatever happens. If I see a bush start to move, I'm not going to be like, oh, well, it's probably just a squirrel. It's like, no, my brain is going to immediately kick in that fight or flight response. And it's like, hey, that's probably a bear or a saber-toothed tiger or a big animal that's going to eat me. I'm going to run and I'm going to get out of here, right? So that's what happens in trading. When we start trading, it's unknown, right? We can't control the outcome, which our brain does not like. The human brain likes to be in control. It doesn't like to be in uncertain situations, which is basically what trading is, right? It's probability based. It's not certainty based, which is what our brain enjoys. So I'll go over some quick little practices for you guys that you guys can definitely use. Journaling, as I mentioned, besides journaling your trades, it's going to be important to have like another journal that you keep aside from your trading journal, where you can write down your thoughts and your feelings on what may be happening during that day, what's happening during our lives, the trading session, whatever may be going on, write all of that down because you really don't want to keep that in your head. And we don't want to bring those thoughts and emotions to us to a following day, right? I've seen time and time and again where I've seen individuals, let's say if you lost 2 days in a row, and let's say for the sake of the conversation, you lost $300 yesterday, and today you're in a trade and you're up $300. And then in your head, you're like, well, I'm up $300. If I take this trade off now, then I can make up for the trade that I lost yesterday. And then you get out at $300 and then you're net zero for yesterday and today. And then what ends up happening? Your trade goes to $1,000. So you missed out on an additional $700 by focusing on what happened yesterday, as opposed to treating today as its own day, which is what, in my opinion, what we should be doing, right? We should never bring what happened yesterday to today. Every single trading day is different. And whatever happened yesterday may not happen today. You can make $2,000 yesterday, but today the market might only give you $200, and that's okay, right? We have to be grateful for what the market gives us. There's many people in the world who work 8, 10, 20 hours to make what we can make in an hour, or even in 5 minutes or 30 minutes or in 2 hours, right? So whatever the market gives, we always need to practice gratefulness. Super, super important. And, like I have a buddy of mine, which of course I'll keep anonymous, but he knows who he is. And even myself, right? We would be up like back then, like $3,000 in like 2 hours, but we want more, right? And it's like understanding that if the market is giving me $1,000 in an hour, we should take that, right? I used to work 2 weeks to make $1,000, and I'm making that in an hour, right? So it's like whatever the market gives you and whatever the setup gives you, you have to be okay with that, right? Whereas, my buddy, when we would talk about it, he would be up $4,000 or $5,000 in 2 hours, and he's like, "Oh, I wanted 10,000." It's like, dude, you made $5,000 in 2 hours. Like, shut it down. Like, I'm gonna have to run to your house and turn it off for you, because it's like, we have to be grateful for what the market gives us ultimately. Oh, I definitely like that. The cookie jar. You want to take more than what your hand can hold. Thank you for that. Next, breath work is really going to be important. So, breathing practices is really going to allow us to slow down the emotional process when our mind kicks in, the fight or flight response, to protect us during uncertain moments, right? Again, our brain does not like being in uncertain situations. It's really going to do whatever it can to get us to stop doing what we're doing, whether that be over leveraging, blowing your account. Because if you blow your account, then you're going to stop trading, right? And our brain is going to do anything we can to stop that. As Guy mentioned, like the pain, right? Oh, if I just take this trade off now at $500 when my target is 1,000, I can stop the pain of feeling so anxious. Or if I just take the loss at 2% instead of 5% where my stop loss is, it'll remove the pain of, being in this uncertain situation, which I don't want to be in. But again, that's kind of like when I worked under Randy Howell, one of my trading psychology mentors. He talks about developing the trader's mind, right? Where if you bring the human mind to trading, or we don't like being in uncertain situations, the trader's mind understands that this is just probability, and we just have to practice patience and wait. So, with your breathing practices, it can really slow down the emotional process and bring you back to a logical state and saying, hey, nothing is wrong with this trade. This is just my brain going haywire and getting hijacked and wanting to get out of the situation. But relaxing and bringing back the trader's mind, it's really all right. Nothing is bad with this trade. This is just my mind getting in its own way, which is okay. The brain is supposed to do that. But it's having the discipline and the mental clarity and awareness to understand that, hey, there's nothing for me to do right now. I'm just going to control myself, going to relax and just chill. So breathing practices definitely work. Like what I did earlier today, when Guy was speaking, I was in a trade. It started consolidating, which generally it's not supposed to do with that specific setup. So I'm like, I'm getting that itch to like mess with my trade. That's my human brain trying to like get out of that uncomfortable situation. But I'm like, hey, the trader understands. It is what it is. You just have to wait. So instead of me still staying at the chart and looking at the screen and getting triggered by that, I got up, went and sat down on my balcony and just, practiced my box breathing. And then once I was relaxed, then I came back and sat down with everybody and continued trading. Anybody ever been in that situation? You get in a trade and nothing is wrong, but your brain, your heart rate starts elevating. You stop breathing properly. You get super anxious. I've definitely been there. I was there this morning. So, definitely a human response. Because I always hear people say like, oh, to be a great trader, you have to get rid of your emotions. We're emotional creatures. It is impossible to get rid of your emotions. So really understand that, it's really about managing your emotions, right? Yeah, Omari was in the trading session this morning. So when that setup was taking like all that consolidation before it went up, that's not supposed to happen from the other ones, right? So I got up and I went and did my thing and came back. And lastly, for self-reflection, right? We definitely need to have self-reflection time. Having honest self-reflection is really going to allow you to understand where we may be getting triggered, which may lead you to go on tilt when trading. Knowing yourself is really going to be key. Questions that you can definitely ask yourself can include, why does this make me upset? What is the root issue of what's going on? What made me feel greedy? What made me feel fearful, right? So, for example, for the trading, why does this make me upset? It's really important to understand what is the thought process behind when you take trades, whether you lose or win, and understand where that is stemming from, right? So, for example, if you lose a trade, but it was your setup and you get a negative emotional response to it, the trade is just a trade, right? It's neutral. Whether I win a trade or whether I lose a trade, that's my setup. It shouldn't generally evoke an emotional response because you just did what you're supposed to do, right? If you did what you're supposed to do and the trade lost, then you were just on the other side of probability, and that's all right. But if you start to feel angry and upset, or you want to revenge trade and get that money back, you really have to ask yourself, and that awareness, and bring up that awareness within yourself is like, all right, why am I getting upset? Why do I want to revenge trade and jump back in a trade that I know is not my trade, right? I'll give you guys an example of something that happened to me recently. A family member recently purchased a home, and I was like, hey, let me trade and help them out. And I took a loss, and something happened to me that hasn't happened in a while, where I wanted to like revenge trade, and I'm like, why am I wanting to revenge trade? I haven't felt this in a really, really, really long time. Like, where's this coming from? So I took a step back, went and did my breathing practice and relaxed. And then I thought about it, and I was like, oh, I wanted to get that money back because that could have been money that I could have given my family member to help out with their house, right? Or with their home. So because of that outside activity, and what I was bringing into the market for what I wanted, that's where I was getting triggered by. It wasn't just because I lost a trade, because again, losing and winning a trade, it is what it is. But we really need to ask ourselves, what is the root issue behind it, right? Like the emotion is just a response or an outcome of something else. And we really need to understand and spend some time with us, getting that down packed. I myself am not a psychologist, so you can definitely reach out to Alex and he will definitely help you see what the root causes are. So send him a message. Best Loser Wins. Definitely a great book. Highly recommend that one. Is all of this making sense? Self-reflection, breathwork journaling, and why it's important for emotional regulation and your trading success? Excellent. Alex will answer all of the messages. Perfect. So, one last thing about self-reflection, as Guy mentioned, when you start to blame things outside of yourself, you need to take a look in the mirror, because every time I start seeing people use specific language, and language is really going to be an indicator of what's going on, right? Every time I hear people say, oh, like, oh, the algorithms, like Guy mentioned, oh, the algorithms are doing this in January or December, or, Trump or whatever it may be, right? Like I saw this post on Reddit and the guy was like, oh, like December was horrible, the algorithm, this and that. And I'm like, December was my best year last year. So there's something going on here. And I asked the individual, I was like, hey, based on the other months, what changed in December? And then I'm like, spend some time being honest, because I would want an honest response so I can better help. And he was like, well, to be truthful, I started taking signals from my friends, and I started over leveraging and not respecting my system and my plan and my risk management. So it's like, all right, we can see that the issue wasn't that December was a bad month and the algorithm changed. It was that you switched up what you changed, what was bringing you the success. You started taking trades from your friends that you never do. You started taking signals. You started over leveraging, not respecting your stop losses. And I get it. As humans, it's easier to blame things outside of ourselves than ourselves. But in order to grow as traders and even as human beings, we really need to be honest with ourselves and being clear on what parts of our lives we need to improve on so we can reach the goals that we want. I can continue for 3,000 more hours talking about this since I love it, but that's pretty much all I have for the presentation. What questions do you guys have? Put it in the chat. Actually, while you guys are typing your questions, there was a question earlier that somebody put. Let's see if I can find it. Scorpio FX mentioned, do you believe trading rules is something that can be ingrained in the mental? Absolutely. It's just behavior, right? It's really just creating that behavior. And let's say, for an example, if you lose a trade, you have two options. You're going to revenge trade, or you're just going to wait for another setup. So it's choosing um, the outcome that you want in relation to the goal that you want to reach. So it's really just about building that muscle. It gets easier. Like I said, I still get emotional. That happens. I'm human, but it happens a lot less than how it used to way back when, because I'm more aware from what triggers me and understanding myself a lot more than I used to.
Let me help you with the question. So simple question: how many hours should the trader sleep to trade effectively?
That's a great question. That really depends on the individual. I myself, I need at least like 7 to 8 hours. So the latest that I'll probably go to bed is about like 11:30 to 12. I usually wake up every day like 7:45 to 7. So about 7 to 8 hours for me work best. I know friends who only sleep 4 hours. I have no idea how they survive, but they make it work. That's not me at all. So definitely 7 to 8 hours definitely works. But for the most part, everybody's different. But that seems to be the most optimal for myself and from what I've read and such.
Okay, thank you so much. Really easy question from the first review, but let's discuss. How does emotional discipline play a role in maintaining control over trading decisions? But I want to emphasize the part of emotional discipline. Is it possible to build emotional discipline? Because emotion, that's how we feel, and it's simple.
Yeah, it can definitely be trained. Like I mentioned with the behaviors, right? Like, for example, today when I started to get like that little emotional response to the trade this morning, I could have done different things. I could have either succumbed to my emotions, and I could have messed with the trade, and I would have gotten out prematurely. Like somebody in my group, they said, "Oh, I got out earlier than you guys," because he let his mind take over and mess with the trade. Or we have the other option where we can just get up and leave. Because again, your job as a trader is done once you get into the trade. You just have to manage yourself and your emotional discipline now. And again, it gets easier over time. Like for those who go to the gym, or I know Alex, I know you run a lot. I'm pretty sure in the beginning, when you started running, it was a little more challenging at first, and then it got easier over time. Where it's like, cool, I'm gonna get up today, I'm gonna run for an hour or whatever it may be that you do. And then at first, it was like, oh, I got to get up. I'm tired. I'm this. I'm that. And then your mind isn't 100% there to really just continue that. But then as you continue doing that every single day, it gets ingrained in your subconscious and in your everyday habits, right? As humans, we're really just a collection of our habits, right? For example, for me, I used to go to bed super late, and then I would wake up super late. However, when my life coach was like, hey, if you really want to achieve this and you want to achieve this level of health, you need to go to bed early. You need to, stop being on your phone or playing games or whatever it may be before you go to bed. You need to have that routine. And at first, it was challenging because that's what I was used to. I will be on my phone. I will be playing games with friends. I will be doing this. I'll be doing that. And then it wasn't until I stopped doing those things that it got easier. Like now, I get tired at like 9 p.m. and then I'm ready to go to bed at 11. Where before I would be tired to go to bed at like 2 in the morning. So it's really just having those habits and changing your habits that's going to help you establish that discipline. And even in moments that you don't want to do it, one thing that I do that helps me in moments that I'm like, I don't really want to work out, or I don't want to do this, or I don't want to do that. Ask yourself, with the future version of myself that I want to be, if I don't do this, is that getting closer to what I want to do? Or if I do this, is it getting closer to what I do want to do? And if the answer is no, if it's not going to get me closer to what I want, then you need to have a talk with yourself. It's like, hey, this is what I need to do in order to reach this. And then, you just do it anyway, because the feeling is going to come and go.
Absolutely, absolutely, and thank you for this example from my practice. Yes, I'm running. I run like two marathons, and now I'm preparing for an ultra marathon for 80 kilometers. And guys, so sometimes I hate running, but I'm waking up and I started because there is no possibility not to run, because I want to run ultra marathon. I want to make like marathon from 3 hours, and that's it. Speaking about emotional discipline, may I add something? So it's possible to make discipline and behavior, but emotion, that's what you feel. You will feel it in this or in other way. So you will feel it for sure. You cannot feel not emotions, right? So you just but you decide how you behave according to your emotion, or just knowing that you have emotions, but you have your plan, and you need to follow it. So it's absolutely important to go this way. So we also have a question about, do you believe trading rules in something that can become ingrained in the mental, sort of like driving a car where you don't consistently have to remind yourself your rules? They are second nature. What do you think?
Yeah, absolutely. As I mentioned earlier, it's, at first it's going to be a little challenging, but it'll get easier over time. One thing that I have all my students do is, after we develop their rules, I have them printed out, and they have to have it next to their trading desk. Can't really see it, but it's a little blurry. But
Yeah.
they have to have their rules in front of them, so you can visually see it every single day. Because I always hear people, oh yeah, I have rules, but it's in my journal, it's in my phone. But it's like, you need to have it in front of you every single day, because there's no excuse. You have it right in front of you. You can see it. Hey, my first rule: do not trade while you're tired. When I get on my desk, I see that. Yeah, it's like, today I'm a little tired. I'm not even gonna open up any charts, because I know if I do open up any charts, I'm gonna be enticed to trade. So, having those rules makes it easier, right? And I'll give you an example for myself, where sometimes when I'll live trade with my group and other friends, some people will take trades that may use a different strategy than I do. And they'll some people sometimes will make fun of me, like, hey, Desi, have you taken the trade yet? I'm like, nope. And they're like, oh, why not? Just push the button. And I'm like, I'm not going to push the button, because, nothing has showed up yet that I want to take. And, having that control and really not being like pressured into doing things that you're not supposed to do. Right. So in like a long time ago, if that happened to me, I would have taken a trade, because I didn't have that discipline that I built over time. And again, everybody's different. It's going to take some people more time, some people a little less time. But generally, it definitely can be ingrained. The biggest thing is really just making sure that you write down your rules, you have them in front of you, and that you follow them every day. Again, give yourself grace. As Agnieszka mentioned, we're human. We're going to make mistakes. But the more you follow them, the easier it's going to be.
Thank you so much, Desi. Thank you for your insights. Your, handbook. It's what the majority of traders wanted. Thank you for sharing your slides. So a lot of information I'm taking for myself in my trading journey. Thank you so much, and thank you for supporting us.
Absolutely. Thank you so much for having me. And thank you, everybody, for your questions and your participation. We'll definitely see you in the next session.